European stocks rose and the euro rose after yesterday's meeting between German Chancellor Angela Merkel and French President Nicolas Sarkozy. There was some confusion, though, as to what actually came out of that meeting. Some market watchers saying the meeting paved the way for euro bonds and a tighter fiscal union. Others saying that they flatly rejected it. For more on this situation and hopefully to help us clear things up, Axel Merk joins us right now, President of Merk Investments. They have 750 million euros in currency investments. And Axel, you obviously watch the euro here very closely. So what do you think we actually got out of that? Why so much confusion from yesterday's meeting?
Well, hi, Matt. Because we, again, had a lot of talk and little substance, but we have to take a step back and realize what they're talking about, the budget constraints, the coordinated fiscal policy is already happening. Think about it. Every weak country that's asking for help from the IMF or the ESFS, the Eurozone, has given up sovereign control over its budgeting process. The only difference is what we need is we need a more structured, orderly approach to it. Stressful times are less stressful if there are institutional processes in place. But the result has been the same, that a lot of terms have been negotiated in order for this budget money to be released. And if you do have a central finance minister, that's what we're looking for. Now, of course, this is one step in a long road, and that's what these speeches were about yesterday. There wasn't much substance there, but it's one step along the way.
I have to say, I was reading Howard Wheeldon's note from BGC Partners this morning, and I'll just give you basically the beginning of it so you can tell the tone of it. He says, Germany's Chancellor Angela Merkel and French President Nicolas Sarkozy probably achieved little more yesterday than unknowingly and unwittingly signing a first-stage death warrant for the euro. So many people, Axel, have come out and said the Eurozone has to split apart at least into a two-tiered system. Why do you disagree with them?
Well, first of all, when we buy the euro, we buy German T-bills. We have never touched Southern European debt. What we believe is that the reason you have these problems in the Eurozone is precisely because not as much money is being spent and printed. People have to differentiate between bonds in the Eurozone and the currency. The currency is often sold because of the greater liquidity and obviously because we need some more clarity on some of the processes. But ultimately, the European Central Bank has mopped up liquidity over the past year, unlike the Federal Reserve. It is more difficult to spend and print money. There's a very different mindset there. We do know a central bank can keep up even a zombie banking system. So all these things are things we can work through. Now, no doubt about it, over time, there is a risk of Germany possibly losing its AAA credit rating. But who isn't in this world? The U.S. is as well. And it's a process. These things take a step at a time. We believe that the euro will continue to climb that wall of words. Imagine, we had 144 or so at the euro, not at parity, despite many of these problems being more severe. And it's precisely a result of the European Central Bank being more cautious. That doesn't mean we like everything happening there, but this more lackluster approach, this very ugly approach, is resulting in a stronger euro.
Axel, I keep hearing you saying this is kind of one step in a long road. We've been dealing with this road for a while now, over a year and a half or so, easily, if not more. Shouldn't we be further along in the process? Shouldn't we be seeing more aggressive steps being taken by European officials at this point to really deal with this crisis?
Well, we have been talking about this wonderful dialogue between the bond market and policymakers. Think about how quickly Berlusconi in Italy acted after the bond market provided the quote-unquote incentive to act. And as soon as that pressure comes off, the progress is slower. Now the European Central Bank is actively engaged in buying bonds, which means the progress will slow down. This is going to be back and forth. There is no silver bullet. This will take years. And similar in the U.S., the bond market is behaving as a result. We're not introducing any serious fiscal reform. At some point that will change. Who knows exactly when that will be? The key difference is that in the U.S., the currency is vulnerable because of the current account deficit. In the Eurozone, when you have lackluster growth because of all this confusion, it doesn't mean the euro has to suffer. Just look at Japan. Lousy economic growth for 20 years, yet you have a very strong currency. So the currency can thrive in this. Policymakers will be kicked out of office, but the opposition parties will pursue exactly the same policies because the bond market is dictating the terms.
Axel, well, I mean, is that going to push the German people to go for this? Because, and you have a close connection, obviously, with the German people. Why would they want to foot the bill for all of the peripheral countries? And also, Howard Wheeldon makes the point that if there's a tighter fiscal union, Germany and France will rule the roost. Why would some of the other countries, Belgium and Holland, for example, even want to be involved in that?
Well, everybody has had great benefits from the Eurozone, but think about Germany for a second. Imagine the Merkel government doesn't survive this because of internal disputes or because electoral changes. Well, the Social Democrats in Germany, they would love to have a Marshall Plan. They love Eurobonds. And so, yes, these policies are highly unpopular, and some governments will be voted out of office, not just in Germany. But that doesn't mean that the gist of the policies will be changing. And yes, policy making will be very difficult. But we also know that policymakers, central bankers in particular, are very bad poker players. Nobody has failed other than Lehman, really. And we also know that many of these governments will be bailed out. Now, at the same time, we also believe that Greece at some point will default or have very, very difficult time down the road. But overall, the euro as a whole can do quite well in this environment. But yes, it's going to be a very rough road.
Axel, got 20 seconds for you. So what's the trade right now? What's the play here?
Well, we've been selling the dollar. We've been buying the euro. We have also been buying the Norwegian crown, partly shifting money out of Switzerland. That trade is no longer risk-free. We have a global slowdown, so we've been taking some money out of Canada. You can only buy Canada if you believe in the U.S. But we've been substantially increasing our already high euro holding because we like what we see there. We like how less money is being printed, and we do believe the euro will thrive going forward.
All right, hey, Axel, thanks so much for joining us. Axel Merk there from Merk Investments.